Hi there, welcome to Kneppy Invest and welcome to the final trading day of January 2025. We are in the closing auction and it's been a pretty good day, which is not a surprise because Dow Jones was up 0.3%, NASDAQ up 0.4%. So I didn't really expect a bad day, maybe not as good as day as we've had. Actually up 0.53%, small caps and tech up by more than 1%. Now, today is also one of the busiest days of the year because it is the final day that many small companies, and maybe some not so small companies, have to release their Appendix 4C or 5B. They can release it on the morning of Monday, the 3rd of February, but if they don't release it before trading begins, they will be suspended. So typically, they want to get their report in by the end of trading today. And a lot of companies wait to the last second. So we do see a lot of announcements being released today, and I tend to want to go through most of them. Yep, so we have 515 events released so far today. At the start of January, we saw some days with only 35 price-sensitive announcements. So you can just see a bit of a discrepancy between some days and this particular day. But this is what happens on the last day of quarter reporting month. It's really busy. I won't go through all these. I've been through all the Appendix 4Cs and 5Bs up until 10 a.m. So any quarter report that's been released since 10 a.m. and now I have not had a look at, including Magnus Energy, which is suspended anyway, so it doesn't really matter. So I might have missed one or two really good Appendix 4Cs or 5Bs since 10 a.m., but more than likely, any good quarter report has been released by now. One or two might slip through, but most companies' management wants to release their really good quarter before today. Now, funny enough, the stock of the day, Medical Developments, released an absolutely beautiful Appendix 4C this morning. So it doesn't always work like that, that companies, if they do have a really good quarter, release it before today. Some do release it on the final trading day of the month. Anyway, the agenda for today's video, we'll go through the ASX today, look at the best and worst performing sectors, indices, also companies, top 5 stocks of the day. Quite a few interesting, not interesting announcements, quite a few companies released what seemingly were interesting announcements, but based off the market reaction, maybe were not, including Resmed, Deterra Royalties, Frontier Digital Ventures, Credit Clear, Ramsay Health, MoneyMe, Connection or Coda, Prophecy International, and Pacific Current. Not much movement in share price of any of those companies, but I have come up with the top 5 stocks. Number 1, and the stock of the day, easy decision, Medical Developments, share price up 50% last time I looked. Really good Appendix 4C. Did not take a position in that company today, but I wish I did buy an open. I was thinking of it. I thought I'd just wait just to see how the market reacts, and the reaction of the market has been 2 thumbs up. The other companies I've included into the top 5 stocks include Resmed, Ramsay Healthcare, a company called Mastermyne, to go MYE. You'll see why I've included that in the top 5. And then Deterra, I just could not decide that last company. I've gone with Deterra. I might change it if I find a better company during or through the top gainers and top losers. Anyway, so let's have a look at the ASX today. Pretty good day. I mean, the NASDAQ and Dow Jones were up a little bit. So a little bit surprised we were up a fair bit. I had a look at the performance of my portfolio before I started recording. It was up about 1.4%. I was like, oh, a really good day. Smashed the market. But I also just noticed small caps and tech up above 1%. That's probably why my portfolio has done well, because I wouldn't say consolidated in small caps and tech, but a lot of my holdings are small caps and tech companies. Okay, so if you have a look at the indices today, yeah, pretty good day, nothing to complain about. And if you have a look at the sectors and indices, yeah, IT up significantly, and real estate materials up by more than 1%. And utilities, that's interesting. Utilities down 4.26%. What is happening there? I have no idea. And when I don't have an idea, I don't just try to guess, I try to find out what's happening. So we do have a list of companies within the utility sector, and we can list this by market cap. And Origin Energy down 7.14%. Okay, that makes sense. They did release their quarterly report today, which I forgot to mention. And I am sorry, Deterra. Based off Origin Energy and the market reaction, I'm going to exclude Deterra and put Origin Energy at number 5, maybe even higher. Maybe it should be like number 2 based off this share price decrease. So I actually did not have a look at their quarterly report. So I'm going into that report blind, but obviously there must be something negative in there. Whole reason I did not go through it is because there was just so many announcements that I wanted to get through. So completely missed that. And that's why utilities is down. Origin Energy has a markup of 18 billion. The next biggest company in this sector is APA Group with a markup of 9 billion. So the way Origin Energy goes, the way utility goes. So there's a bit of a correlation between the two. AGLG down 2%. So probably share price of that company is down because of Origin. I'm just assuming there. But of course, making assumptions can lead to making an ass out of you and me. Yeah, I think that's how it goes. Yeah, anyway. So utilities down a fair bit. Gold's had a really good day. I'm assuming gold's had a good day because of Trump's tariffs on Mexico, 25% tariffs on Mexico and Canada. Won't see anything negative. If you do watch my videos, you know my thoughts on tariffs. It's not going to end well for any country, not company. Well, actually won't end well for some companies. Anyway, so we'll move on. That's why gold is up, I'm assuming. We can confirm that. Maybe, let's have a look. Dollar holds gains as Trump reaffirms tariffs. Oil rises amid Trump reiterating tariff plans. Nothing on gold here. Maybe in Capital Brief. Gold stocks surge as Trump tariff threats boost bullion price. There we go. Okay, so that's why gold's had a really good day today. And banks flat. So most of the bullishness in the ASX 20 only up 0.37%, by the way. And it's probably because banks are flat. Okay, so let's have a look at the top gainers. Let's see if I've missed anything. And sometimes I do miss something. Hello, Origin Energy. And by far the best performing company today. By far the MVP of trading today on the ASX has been Medical Developments. Share price up 50%, almost 50%. I'm a little bit surprised. It opened at 48 cents. And I was thinking, oh, should I buy? I just sort of wish I did now. I saw their quarterly report. I liked it a lot. I don't mind this company, and this could be the inflection point for Medical Developments, and that's why the share price is up. Not only that, I think the company was really good value. Had a markup of something like 45 million, also had about $15 million of cash in hand, so enterprise value of 30 million. And that's why the share price is up. I think it surprised the market. The market did not expect this from Medical Developments. And that is what can happen. If results surprise the market, this is what can happen. Not only can the share price rise a lot, it can fall a lot if it's a negative report. What else do we have here? Nothing. Ooh, Bioxen. Go Bioxen. Should we have a look at the chart? Should I be really selfish and have a look at the chart for Bioxen? I'll do that at the end of the video. I'm just going to write it down so I don't forget. I can forget, by the way. I don't have a good memory. Yeah, Bioxen. So for those who haven't heard, I bought Bioxen quite a few months ago at 1.2 cents. It wasn't a very confident buy, and I'll talk about more why. Nanaview, really good day yesterday, up 18.4% today on the back of hiring some dude who has a name, I don't know, but the market likes that, higher. And there's nothing else here. So I might have missed, some of these companies might have released a really good Appendix 4C or 5B, and I've just missed it. Maybe Curvebeam. I don't think so. Whitehawk did, but it wasn't that good. Anyway, so let's have a look at top gainers by market cap. And Appen, no. Vysarn, pretty good day, Vysarn. Phoenix, Iron Ore must have had a good day. I don't think Phoenix did release anything today. I didn't see it, but I could be wrong. No, they released, a week ago. So I'm not sure what's happening there. Maybe it's Iron Ore going on a bit of a surge. Oh, EZZ. It bounced. It's bounced. Go EZZ. I expected a bit of a bounce eventually, and today that bounce has happened. Yeah, up 10.77%. That's after 3 big down days. And it's really interesting. I did have a look at EZZ on open this morning, and there was a dump of shares. Yeah, I want to show you this. There was a dump of shares just after open, and that was capitulation. And you can see it at 10.0424. Share price was $1.99. And someone just went, I can't take this anymore. I've just got to dump all my shares. And they sent the share price from $1.99 down to $1.84. and there was no more trading for 20 minutes. I think that was it. I think that was it. That was the last seller. That was the last person who just couldn't handle it anymore. They just had to get out, and the share price has rallied significantly since then. Just imagine how that person's feeling now, dumping their shares at $1.84, and the share price is now to $16. They've made a bad decision. Anyway, so a really good rally for EZZ. Doesn't mean that's a shift in trend or anything like that. We'll have a look at the chart right now. But I was thinking of adding to my position. Maybe, I don't know. I'm still thinking about it. Anyway, so EZZ, nice little bounce there. Max 7 doing a share buyback. Talking about that company yesterday. Share price has gone up again today. Plainside Studios, a little bit of bounce as well. And I'm thinking of buying some shares in Plainside Studios as a contrarian play. I think this could be the worst. The worst is in for Plainside Studios, but it is risky. It is risky, particularly if they don't release anything positive within the next year. The share price just might flounder. So there is a bit of risk buying Plainside Studios down to these levels, but I might be willing to take that risk. Okay, that's the top gain. It's nothing of note, which not surprising. Not surprising. Healthcare and Wellness REIT. Don't you see REIT? It's up 7.84%. What's the T code again? It was HCW. Did they release anything today? It could have. They could have, because I might have missed a few. No, nothing. So they just mentioned they're releasing half-year results on 13th of February. So I'm not sure what's happening there. Okay, let's have a look at the top losers. Let's see if there's anything interesting here. We know Origin Energy more than likely is in the top losers by market cap. Outtree up a lot yesterday, down a lot today. You see that a lot. Peninsula did release their Appendix 5B, no receipts. Maybe that's why share price is down 18%. Dubber released their Appendix 4C. I thought the market was believing, if you have a look at the chart, by the way, I was thinking the market was expecting some good financial results from Dubber, with the share price just taking off. And today, the Appendix 4C came in and still burning through a lot of cash. I think it was like $4 or $5 million in a quarter. So really, company hasn't really got close to that inflection point, unlike medical developments. What else? There's a few other companies, like I think Lumos Diagnostics released their Appendix 4C. PointsBet released their Appendix 4C. Must have disappointed the market because share price is down 13%. And I'm pretty sure JatCorp also released their Appendix 4C, share price down 13%. So definitely PointsBet did. I did have a look at it, and they were not operating cash flow positive, I think. I could be wrong, but it wasn't impressive. I wasn't impressed by PointsBet. Now let's have a look at the worst performers by market cap. And there's Origin Energy at the top. Magellan down 8%. Let's have a look. Magellan shares extend losses after Jarden downgrade. Again, you know what I think about downgrades. Broker downgrades or upgrades are just stupid. Why anyone will react to that? And the classic case example of this is Vysarn. 1 week, someone downgraded, share price dropped 10%. The next week, someone else upgraded, share price rallied 10%. It's just ridiculous why anyone would react to any sort of broker downgrade. That's just me. You can do your own thing, but I would never even look at broker upgrades or downgrades unless I was just trading the reaction. If I was trading a reaction, maybe you could make some money doing that, because the market's stupid when it comes to that. I'm going to say it. Market is stupid. Grange, Bluebet released their results. Not impressive. What else? Nothing much here. Nothing much there that I want to talk about. Okay, so let's get to the top 5 stocks of the day. I am writing down, my shooter paper fell. So I am writing down all the Appendix 4Cs or 5Bs are in the running to be the top callers of the quarter. Quite a few companies released their results today, including the stock of the day, Medical Developments. But some of the other companies that look interesting include Donaco, Brookside, Max 7, XRG, operating cash flow positive. In fact, I just want to see how the share price has reacted. X-Reality, flat. So share price was up almost 10%. And Arctus and MYE, which is one of my stocks of the day. So I'll talk about, and Numi. Noumi, N-O-U. What's it called again? Yeah, Noumi. Share price down 8%. Okay, so I thought that might have been positive. And based off the market reaction, maybe it's not. Anyway, so I will try to rank all the Appendix 4Cs and 5Bs for the month and come up with the top 20 or so. Anyway, that's a project I am looking forward to doing. Okay, so let's go to the top 5 stocks of the day. And we'll start off with Origin Energy. By the way, Deterra, actually, I'll just show you Deterra because it did get close. One of the reasons I was going to include Deterra is just because the chart started to look interesting. They released their sort of update, and the update didn't seem that bad. Share price actually was up at one point, and still up 1.25%. But this chart is starting to look interesting. There was a moving average crossover a few weeks ago. Share price got above $4, which is an important level. I did buy some shares at $4 when it first got into this purple box, which is a nice support zone for this company. So between about $3.70 and $4. The reason that's a nice support zone is if you go back in time, whenever the share price gets into this purple box, it's a good time to buy. I don't expect much of a gain, capital gain, but I could maybe hope for 25% capital gain, maybe 33%, and also get some dividends on top of that. One of the reasons why the share price did fall into this purple box is because they released some sort of dividend policy moving forward, and they said at least 50%. So people thought, oh, they're only going to give 50% of their earnings back as dividend, but they said minimum 50%. So it wasn't a reaction from the market. This quarterly update was, I thought, pretty good from the company. And the share price did get to 420 at one point today. So that was as like a 7-month high. So a potentially good chart and a potential breakout for Deterra. Now onto Origin Energy. I did see this announcement, this core report. Share price down 6.7%. I did not open it up. I just went, I'll move on. There was quite a few mining companies who also released their report, and I just moved on because there were so many Appendix 4Cs and 5Bs I had to get through before market open. I just want to get through as many as I can before the market opens. So I have no idea why the share price is down. Now, I could go to a capital brief here just to see if Origin Energy has been mentioned here. Oh, Mesoblast share price is up. Here we go. Origin Energy shares drop after lowering LNG guidance. That's not good. We'll just have a look to see. In fact, maybe we can open this up ourselves. Now, the problem with doing this, going into a blind, a lot of times when I do talk about a company, I've already had a look at it. It might be a quick look, but when I'm opening blind, and you can see a lot of stuff is here. There's a lot of information here. I could completely miss why the share price is down. A lot of times, if they do release any sort of guidance update, that could drive my opinion. So we have a lot of stuff here. Yeah, there's a lot of stuff here. What I was doing is I was looking for any sign of any sort of guidance. And here we go, updated financial year 25 guidance. Okay, so I'm just happy I found it. I could have been wobbling on there for a while. Okay, so this is probably the most important thing, and this is probably what I was talking about in this particular article on Capital Brief. So they've got a previous guidance and an updated guidance. So straight away, this is something that will be important and can drive the share price higher or lower. In this case, we know it's lower. So production, previous guidance was, updated guidance is down. And it's down a little bit, but not a lot. But all you need is down a little bit for the share price to suffer. And capital expenditure and operating expenses are down. No, is that up? No, it's down a little bit. But the main thing here is production for APLNG, down from 670 to 690 to 685. No, from 685 to 710, down to 670 to 690. And that's why the share price is down. So production guidance reduced by 2 to 3%. So thank you, Capital Brief. I don't have to look at you anymore. It makes sense now. So let's have a look at the chart for Origin Energy. And funny enough, the market didn't initially react to this. The share price, fell during the day. In fact, doesn't look like the share price. Oh, at one point, the share price was higher than yesterday. Where was trading beginning? I don't see how. Well, no. It was never up. It just looks like it was up if you look at the daily chart. So we saw a lot of selling in the first hour, and just by looking at this chart, selling all the way through the day. Some big spikes in volume in the last hour or so. So this particular report was not met positively by the market, which is understandable because it was a downgrade. Other than that, the chart was actually looking pretty good for Origin Energy. It was looking pretty good for Origin Energy. Maybe this has put a dent in that positive sentiment. Coming in at number 4, we have, this is an interesting one, Mastermyne, MYE, share price only up 3.13%. So what am I going on here? So the markup of this company, this is going to be important. Markup of this company is $51 million. So keep that in mind when we go through their Appendix 4C. Now, I'm pretty sure this company, they're a mining services company. If my memory is correct, they're a mining services company for coal. I could be completely wrong, by the way. Anyway, so they're a mining services company. I'm just going to have a quick look to see if they do mention what they do. Definitely mining. I'm just going to see if they mention anything about coal. Anglo-American coal. They do mention coal here. I'm wondering if they're more diversified than coal. I'm just seeing coal. Anyway, it doesn't really matter. Or maybe it does matter. No, in this case, it doesn't really matter all that much. Let's go to why I had to put this company in the top 5. Even though the share price hasn't really gone anywhere, it could be just, when we have a look at the chart, you'll see the share price has dropped. Maybe it's dropped from about a year ago, but it looks like maybe the share price is going sideways. So here is why I'm just had to include this company. So receipts, 73 million, but I would assume most mining services company exist on fairly low margins. They have to hire a lot of people, capital expenditure, spend a lot of money on their stuff, product manufacturing and operating costs, which is 18.9 million. Staff costs 42.3 million, which is the major cost for a company like this. But they were operating cash flow positive by 6.7 million. And so far for the year, operating cash flow positive 10.6 million. The interesting thing here is I thought that capital expenditure would be way more than it is. Only $894,000 spent in the past 6 months. Now, that could be a mirage, and maybe other quarters or other half years, they spend a lot more money than that. But just based off the quarter and the half year, this company is operating cash flow and free cash flow positive by a fair bit. For a company with a markup of 50, what was it? I've already forgotten, $51 million. But cash on hand, they have $35 million of cash on hand, which means if they don't have any debt, this company is currently on an enterprise value of $15 million, which is quite low for a company generating $10 million in operating cash flow in 1.5 years. So it seems like there is a bit of disconnect here. So I don't know this company that well. Maybe there's a reason behind that, or maybe the market just hasn't discovered this company. Now, the next thing is debt. They have, according to this, they have $3.37 million in debt, and they have unused financing facilities of $30 million. So not a lot of debt at all, which means enterprise value is now $18 million because you have to add that debt to the enterprise value. Okay, so is there value here? Chart would be the next thing to look at. So this is a chart. I think maybe we are starting to see a share price consolidate after it fell a fair bit. So it fell from about 20, almost 30 cents all the way down to 14 cents. And yeah, this could be a value play. So I am thinking of buying some shares in this one just based off this particular quarter and a half year. But I'm just worried that I might be missing something. And the other thing is that the market isn't that interested, and you need the market to be interested for the share price to go higher. So that's Mastermyne. Coming in number 3, we have Ramsay Healthcare. I included this one because it's a big company. That was my ultimate reason why including Ramsay Healthcare and really Resmed as well. Ramsay Healthcare share price down 0.5%. Leadership changes and strategic realignment, which to me means there are people out there who aren't happy with the direction of Ramsay Healthcare, and they had to make changes with their leadership and their strategy moving forward. So we have a change in some of the staff, including the CFO. Martin Roberts has resigned, and the Ramsay Australia CEO, Carmel Monaghan, looks like she might be retiring after 7 years of distinguished service and nearly 5 years leading the Australian business. And they also talk about new operational structure, Chief Operating Officer in Australia, Chief Commercial Officer Australia, and strategic benefits, and some comments from the CEO. And I'd say more than likely they have been getting pressure to do this because the chart. I have had a few questions about Ramsay Healthcare. Is there value? And I don't see it just yet. But this chart is horrendous. There was a takeover bid a few years ago. Here it is. You can see the share price popping up in April 2022. Share price at that point got to $84. I'm not sure what happened with the takeover bid. I do know some people bought on that. I still don't know why. Claude Walker did. I'm pretty sure he mentioned he bought some shares because of the takeover bid. Anyway, share price has been in a massive funk. I did take a trading position in Ramsay in March last year, but that was a failed trading position. I thought possible breakout on their results in February. No, didn't work out like that. And make sure you always have an exit position, or you have also always have a trading plan. So my plan was to sell if the trade didn't go my way. Didn't go my way, got out, and the share price has fallen significantly since then, probably about 33% or so. And there's no reason to, in my opinion, to think about buying shares in this company unless you think this is a high quality company and you think there's good value at these levels. I'll leave that to you to decide. But just based off the chart, I have no warm, fuzzy feelings about Ramsay Healthcare right now. The other thing is you have a look at the longer term chart. The last time the share price was this low, like $33, was way back in 2013. At that point in time, this was a high quality company. And I said to an acquaintance once, I think this might be one of the highest quality companies on the ASX. And my thoughts have changed significantly in the last 10 years. I don't think that anymore. And that's why. Share price is in a bit of funk. I don't think the company's growing all that much. But the chart just looks horrendous at this point in time. Anyway, so that's Ramsay Healthcare. These changes, these structural changes could be really beneficial for the company in the longer term, but we just don't know right now. Okay, coming in at number 2, we have Ramsay. No, not Ramsay. Resmed. Share price down 0.79%. I'm going to be honest, I'm surprised by this because they did release their second quarter results. And on first look, albeit I'm a little bit biased because I do hold shares in this and I'm also trading Resmed. And I thought, oh, this is pretty good. This is really, really good. So things I look for: revenue growth, margins, are they expanding or contracting? One of the problems I had with Resmed over the past few years, which has been fixed recently, probably the last few quarters, is a contraction in their margins. Our margins have started to expand again. And the thing is, if a company can increase the revenue by 10%, which is what Resmed did, but then increase their margins, that means that revenue increase of 10% will lead to a greater increase in profit. And that is exactly what Resmed have done. Anyway, so revenue up 10%. Gross margin improved 300 basis points to 58.86%. Income from operations up 52%. And operating cash flow of $309 million. They do have a table here somewhere. Where is it here? And you can see the diluted earnings per share up 65%, non-GAAP diluted earnings per share up 29%. So revenue growth 10%, but all those other financial metrics like income, profit, earnings per share up by more than 10%, way more than 10% because of margin expansion. So I thought, oh, the market's going to like this. And I thought the share price would be up. But possibly the market expected it like this. That's my only thoughts. I either missed something completely or the market expected it, which can happen. Sort of like medical developments, share price up 50% because I don't think the market expected that at all, their quarterly report. Anyway, this is the weekly chart for Resmed. Share price is very close to the all-time highs. In fact, let's put a line there, just there. Oh, geez, look at that. Share price for Resmed is sort of hovering at the all-time highs. In fact, it might have got to an all-time high. We can verify that right now. So the all-time high back in September 2021 was $40.79. And this week, the share price of Resmed got to $40.75. So that high is a little bit of resistance. It's also a psychological barrier, maybe subconsciously to some investors. Anyway, so the chart looks interesting. Maybe I should take some profits. I bought at 23.87 back in, is that August, September 2023? So I bought a permanent position and also a trading position. I have yet to sell my trading position because I've been given no reason to sell. Share price just keeps on going up. There was one little period here in June where I thought, ooh, maybe I should sell then, but I'm so glad I did not sell. Anyway, chart looks brilliant. So that's Resmed coming in number 2. If the share price had rallied, say, 5%, could have been the stock of the day. However, I think the stock of the day today is an absolute no-brainer. I've already recorded a standalone video on medical developments. Share price up 51.14%. Share price closed at the high of the day. In fact, it opened at the low of the day. No, not quite the low of the day, very close. I was thinking of buying on open. I was thinking, maybe I'll just wait and see how the share price goes. Share price only opened up 10%, so it went from being up 10% to being up 51%. Sometimes that can happen. And yeah, just wait out for my standalone video. And all the reason why the share price has increased, valuation was low. The market probably had no high expectations for this quarter. Company came in with operating cash flow positiveness of 1.9 million, free cash flow positive of 1.8 million. Market didn't expect that. Share price up 50%. And the chart, well, what can you say about the chart? This is a classic breakout. This is the classic breakout. The beautiful breakout. This is what I'm looking for every single day. Why haven't I taken a position? Well, typically what I do is I just wait just to see how the market reacts. But this is a really bullish one-day candlestick. Share price opened at the lower day, closed at the higher day. Can't get any more bullish than that. I wouldn't be surprised to see the share price pull back a little bit on Monday's session because there will be a fair few holders who didn't realize the share price had rallied today. They don't care why it rallies. They just see it rallies and go, oh, I'm going to sell my shares on open on Monday. So I wouldn't be surprised to see the share price close or open down on Monday. But if it doesn't and the share price goes sideways or even increases, that could be a good sign for medical developments. And even with this rise today, share price and the valuation of this company is not too stretched. Okay. I was going to show you Bioxen, wasn't I? Bioxen. Actually, you know what I might do? What I might do is I'll go through all my trades, particularly my recent, or focusing on my recent trades, and just tell you what my thoughts are and what my plans are moving forward for those trades. And Bioxen might be one of those. So this is a beautiful looking chart. I get a little bit nervous about how quickly the share price is increasing because the quicker it rises up, the more likely it's going to drop significantly. I don't like exponential rises in share price, and we're starting to see that with bots. And so there is a chance I might just take profits with this one if we continue to see this sort of rise. Anyway, so let's have a look at some of your comments today. I'm just going to update this. Peter Zig says, Vysarn, solid support at 40 cents has held. Encouraging price rise today. Might be the start of a reversal and new uptrend. Let's have a look at Vysarn. They haven't released anything of note recently. And I did put, there it is. The share price was in a downtrend. See this dashed line here? It was a pretty well defined downtrend. Share price broke through this downtrend yesterday. I would say people would take notice to that. So they saw it broke out of that downtrend yesterday, and today is the result of that, break of the downtrend. Yeah, beautiful break of a downtrend. People are reacting positively to it. Share price up 9.52%. And I probably have to agree with Pete Zig that this could be a nice little trade. Yes. And the other thing to note here, there was a really big down day in November, and the share price rallied significantly on that day, and we did not see the share price fall below 39 cents. That's really positive as well. So in fact, what you could do here is just put a line there. And what we were waiting for is which way the share price was going to break up or break down, and it broke up. Yeah, so a pretty good chart for Vysarn. Zocta. If Brainchip's technology was half as good as they say it is, they would have had customers beating down their doors and competitors trying to buy them out years ago. That could be true. That could be true. I've heard some people say that before. I just don't see, personally, this is me personally saying, I just don't see, with the markup at 640 million, I just don't see much of a reward here. I just don't see much of a reward. There's a lot of risk. What's your reward? And sure, there's a possibility that this becomes the biggest company on the ASX, but what's the chances of that? It's a fairly small chance. I just don't see much of a. It's the risk is asymmetric. The risk reward is asymmetric towards a risk side. That's just me. The only reason I would even think about taking a position in this company is just to trade it. And I could trade it right now based off this chart, particularly if the share price doesn't drop below that. But I'd want to trade it tight. I wouldn't want to own this for the long term because it could rise or drop a lot. It could drop all the way back down to 1 cent because this is storage stock. It's a story stock. $20,000 in receipts. Anyway. So I sort of agree with Doctor here or ex-Doctor that it's yeah, maybe, I don't know. MAP040 or V0 STX did it 8.3 total relevant outgoing 1216 8.7 estimated quarter. Okay, if the entity has reported positive relevant outgoings, okay. I'm going to read this a little bit more and try to understand it. Probably not a relevant answer and what's this called? Answer and reply comment to go through as I'm recording. Oh, thank you, Ampy now. Roger says QPM barely made a profit with summer generation figures and one of their 2 generators has failed and offline 3 months. Next 2 quarters will be even worse with lower electricity needs in the winter months. So let's have a look at QPM. I don't really follow this company all too closely. What do you call it? What they do. It was just the chart. All I liked was the chart. I don't mind this chart. But the share price did drop a lot when they did release their Appendix 4C, and that sort of dropped 16% down. That means I don't have much interest in this company right now. Anyway, so I'll just move on. And don't forget, there's a lot of opportunities on the market. And I'll be honest with you, if you do have a look at the company in closer detail and you don't like what you see, then yeah, don't trade it. Don't even own it. 9 slide glide. Acusensus' Appendix 4C is worth studying versus previous corresponding period. It appears that operating leverage is starting to come through for the business with operating costs being held steady while receipts are growing nicely. We can do that right now. Let's do that right now. Acusensus, share price up a lot today again, 8%, no, 4%. Oh, it was up a lot. Yeah, so up as high as $1.30. Anyway, so let's have a look at their most recent, not the most recent. We have to go back a year. We'll go back 2 years. And go back last year, and we'll see what 9 slide glide is saying. So what we're doing here is we're comparing costs and receipts to the 2 periods. So this is last year's. We'll put that there. And this year's, we'll put here. Here we go. You know what we could do? We could just put them side to side. Why don't we do that? The only problem with that is I've lost. There we go. Well, I've got to get rid of that. There we go. And we'll get rid of that. This is taking a little bit longer than I really wanted. Okay, so I've got it here. Okay, so last, actually, probably, no, that's okay. I was going to change them around. So last year, receipts of customers 10.2 million. Receipts this particular quarter 14.2. I do like comparing previous corresponding period because it gets rid of seasonality. And so receipts up $4 million. $4 million. And you'll notice operating cash flow went from being operating cash flow negative 2.5 million to operating cash flow positive 5 million. So there's been a change there of 7.5 million. So straight away, with receipts up 4 million and operating cash flow up by 7.5 million, costs must have decreased. So research and development flat or up a little bit. Yeah, up a little bit. Product manufacturing operating costs down about $4 million. Staff costs down a little bit, and administration costs up a little bit. In fact, staff costs and administration probably flat. So it's really product manufacturing and operating costs down a lot. Yes, so we have 4 million up, which means we add that to that 1.6. Yeah, so the main reason why we have seen a really nice increase in operating cash flow is a decrease in product manufacturing and operating costs. Now, I would question this because if you do see a significant increase in product manufacturing and operating costs, that could be leading to significant increase in receipts or revenue over the next few quarters because they're sort of planning for the future. And if you see a big decrease in product manufacturing and operating costs, that could mean, well, maybe the receipts and revenue is going to slow down over the next few quarters. So that's probably one slight red flag, but that's the main reason why there's been a significant improvement in operating cash flow is because of decrease in product manufacturing and operating costs. I'll go through any reasoning they might have for that. There could be some reasoning in their commentary behind that. I don't know because I haven't gone through it just yet. Just too much to do at this point in time. I'll go through most of the Appendix 4Cs I do like, and Acusensus is one of those with finer detail over the next month. But thank you for that 9-slide glide for giving us some of your thoughts. Gazmo says Carnarvon is pronounced Carnarvon. How did I pronounce it? Carnarvon. I don't know. I can't remember how I pronounce it. I just pronounce it how I pronounce it. Rick Thelian looked okay to untrained eye until you saw that revenue margins was less than 2024. Yes, that's the main thing I saw. Margins down. And it's one of the reasons why I always look at margins. Margins are important, which is why I looked at Resmed margins today and I thought, oh, really good improvement there. So I thought the market would react really well to it. So, by the way, how did Zip do today? I did not follow Zip at all. If the share price, share price flat. Ooh, share price did get above 250. If we don't see a share price get above 250, I will be taking profits. And a good point on chart about resistance levels on chart ×2, not going above to match previous highs before today. Yes. Thank you. Thank you, Rick Thelian. I hold XYZ. I believe this is a great indicator we are in a recession. Total spend per person has dropped with Zip. Plus, I've known a lot of people are going for Latitude for this space. Zip, from what I hear, are hard to deal with of late. A lot of retailers are not pushing Zip as well. Thank you, EdgeVest. Getting a lot of good stuff here, aren't we? By the way, XYZ is block. For some reason, they changed the ticker to XYZ. There must be some reason behind it. I don't know why. Don't mind this company, by the way, XYZ or Block, what are they called these days? Brandon at 6618 says, please cover SciDev's 10% drop after release of the Appendix 4C. Did I put SciDev in my list of companies or Appendix 4Cs I wanted to have a closer look at? I definitely did. SDV. I did not have a look at this one with a fine-tooth comb. By the way, I had been trading it. I'm not trading it anymore. I was a holder of SciDev for about 6 years. I thought I'll just go to trade it. So share price up 5.62%, down 10 point. This could be just noise. I did have a quick look at it and I wasn't impressed, but I wasn't disappointed, if that makes sense. It was sort of like Okay. Things are still moving in the right direction. I had no qualms, no problems with it. Operating cash flow positive, if I remember correctly. Receipts at 25 million, operating cash flow positive. I had no problems with it. Maybe the market wanted a little bit more, and again, maybe it was just a bit of noise. So sometimes the share price can move a fair bit up or down just based off short-term sentiment. When I say short-term sentiment, I mean someone could just wake up to a bad morning, have a headache, and decide to sell all their holdings, and they don't care about how much the share price is going to drop. Sort of like EZZ today. Someone just after open just sold all their shares, and share price just plunged to $1.84, and that was sort of like capitulation. By the way, this is a chart, and the chart actually does look negative. So I'm going to get rid of that blue line, and what I'm going to do is put a line right about there. So is that 44 cents could be support for SciDev. But yeah, the chart doesn't look as good as it did from April last year through to November. So for about a 7-month period, the chart looked really good for SciDev. Not anymore. Okay, that's all I'm going to do for today's video. Daddy-O Television says go at Terity. And then there's 2 comments about first comments and second comments. You can do that if you want. Anyway, so that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.